All right, this is episode 6 of the Twin Pod. No guest this time. It's just me and John. Our topic is pretty interesting, I believe. It's something that everyone goes through at some point in their life. If you're older, you already went through this. If you're younger, you're going to go through this at some point in your life. So we just kind of want to share our tips, kind of our experiences, and then maybe some experiences of people we know. And maybe you could learn something from this, prepare yourself for the future, or just get a good laugh. The topic is moving out of your parents' house and becoming self-dependent.
Yeah, and what we're going to go through is just tips and, I guess, tricks or advice that we wish we would have gotten a little bit earlier. But, school doesn't teach you this stuff. School doesn't teach you about taxes. School doesn't teach you about insurance.
Buying a house.
School doesn't teach you about that either. What they do teach you about is slope,
Pythagorean theorem.
What else?
A squared plus B squared equals C squared.
Yeah, all that random stuff.
I don't think I ever used that in my life.
Never used that either.
Good stuff.
So yeah, that's what school teaches you, but they don't teach you all the how to start a business. I mean, I know some schools actually they have something like that in high school. I remember we had DECA class or some random stuff like that. That
Deco?
Deco. So yeah, but it teaches you the kind of basics, but they don't go really into depth about like taxes and insurance. So that's just kind of what we're gonna be touching on real quickly here throughout this podcast. And hopefully you guys can get something out of it. I know there's going to be older people that are watching this and like, man, they're butchering some things. But hey, this is just our what we went through in life so far. And I know this is probably going to change in a few years, but it's all good.
We're just going to share our experiences and
hopefully we could help anyone.
We looked at our analytics for our YouTube channel and Spotify, and most of our viewers are actually 18 to 24. That's like, I think 60% of our viewers. So, I mean, that's right there, the age where you're going to be leaving your parents' house, moving out, getting married. So I think this topic will definitely resonate with a lot of people. And hopefully, this will bring some kind of, I don't know, advice, something you could take out of it. Whoa, hello there. We got our cat with us today, too. She's going to be running around everywhere.
Troublemaker.
Just stay right here. Sit. Good girl. Right there.
She's probably going to stay for like 2 seconds and bounce, watch.
Yeah. All right. Our first experience with moving out of our parents' house was going to Bible college in Jacksonville. That's a whole country across. You know, we grew up in Washington. Jacksonville is in Florida, and there was a lot we learned during that time. For example, we had to make food for ourselves a lot of the time, and that's like coming from a Slavic household where your mom was preparing, 5-course meals for breakfast, lunch, and dinner. That's kind of a shock,
Yeah, every night.
Yeah. So now you gotta figure out, all right, what am I buying? What am I making?
How do I shopping list?
Yeah, how do I even put these ingredients together? You can't just have fish sticks every single night.
Facts. Like, what's onion powder? Like, what's garlic powder? You never think about these things.
Especially if you're a guy. Usually, I mean,
you just whip something together real quick. You're like, why does it not taste the same as my mom's cooking?
Yeah, and especially if you're a guy, because usually we're not taking care of that. So you gotta learn how to make a steak real quick.
Learn how to clean the kitchen. Learn how to wash dishes. I mean, I remember we were in a house full of guys, and the dishes would stack up so fast because everyone was just used to like their moms or their sisters doing it. You know, like as bad as that sounds, but that's what they were used to. So the dishes would stack up like by half the day, the dishes were stacked, and everyone was supposed to wash their own dishes, and there was a lot of guys that did wash their own dishes, but there was some of those guys that just kind of, they're already programmed to just drop it in, and then somehow magically it gets washed. So
we had to toss in a camera at one point, figure out who the culprits were.
Yeah,
that's pretty crazy.
But yeah, the kitchen would look like a mess there. Always constantly cleaning the kitchen. And yeah, so that's just some of the stuff we learned from. Besides Bible topics, that's some of the stuff you learn from going off on your own for a year. Just kind of how to take care of yourself, how to take care of the house.
Yeah, and I think that was the first time we actually had to do our taxes on our own.
Yeah,
was that the first year? I believe so. Yeah,
2021.
Yeah. So, I mean, we obviously didn't make a lot the year prior, so we just used TurboTax, toss in our W-2 in there. And that's another thing, actually, taxes. I mean, schools don't really teach you how to do taxes. Schools don't teach you what a W-2 is, what a 1099 is. Um, so that's kind of something you have to learn on your own.
What a write-off is.
Yeah, what write-offs are, all these things. And some parents teach their kids this, some parents don't. Um, our parents told us that we're gonna have to pay taxes as soon as we start working. So I mean, we would do our YouTube searches and figure it out, and we came across TurboTax, and that makes it everything pretty easy, especially if you have a W-2. W-2 is basically just you're getting pre-taxed, right? So right from your paycheck, this is basically like any corporate job or any of those like bigger companies, they'll always give you a W-2. And what that means
Any
is
hourly job.
yeah, hourly job. So that means when you get your paycheck, the tax is already deducted, right? So your Social Security, your federal income tax, whatever, that's already getting all deducted. And then at the end of the year, when you file your taxes, if you made under a certain percentage, right, you get a refund. If you paid too much in taxes, you'll get a refund.
Well, it's like I call it like buckets. So every tax bracket is like a certain bucket, So there's the 10,000. Once you make $10,000, you're in this bucket, and then I forget here. Let me search it up real quick. Actually, tax brackets.
And then so there's W-2, and then there's 1099, which is usually for either self-employed people or like contractors. And 1099 just basically means that you're not getting taxed on your income, which means you're going to get a fat tax bill at the end of the year. So you're getting more money for each paycheck, right? Because the taxes aren't getting deducted right away. But at the end of the year, you have to pay all the taxes that you didn't pay before. So it's kind of like it's good, but some people don't really like it because usually they won't get a refund for their taxes. They'll actually have to pay.
Yeah. So and then how these tax brackets work? Basically, it's buckets. It's not just a singular tax rate. So say right now it says if you're making between 44,000 and 95,000, your tax rate is 22%. But you don't get taxed 22% on, say you made 80 grand that year. You don't get taxed 22% on that entire 80 grand. No, it starts off like this. So the first tax bracket is $0 to $11,000 at 10%. So you fill up that back bracket. So say you have, let's do some math here. So say you made 80 grand.
Your first 10,000 is taxed at 10%.
First 11,000 is taxed at 10%. So minus 11,000, you're left with $69,000. $69,000 then goes into the next tax bracket, which is 12%, which is $11,001 to $44,725. So the next one is minus 44,725 equals, you're left with 24,000. So and then the rest of the 24,000 that you're left with now gets taxed at the third tax bracket, which is 22%. So yeah. So it's not just a straight. I know you're looking at that 22%. You're like, dang, like I'm getting taxed a lot, but it goes in through buckets. You fill the first bucket, then you fill the second bucket, and then the rest of it gets taxed at that 22%, and so on for there. Like if you're making 500 grand, yeah.
And a lot of people are kind of scared about getting. There's always this fear of like getting audited by the IRS and stuff like that. If you have a regular job, the likelihood of you getting audited is very, 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 very low. Like that's usually reserved for people that are making well over their millions, and they have their own business. They have many sources of income. Government's trying to get their money, so they'll come for them. But if you have a regular W-2 job, which you're just getting a steady paycheck, and you put in your W-2, that's pretty easy to calculate on what your tax is going to be. So even like a program like TurboTax, I mean, they'll take care of that really quickly for your taxes. So don't be too stressed about taxes. There's a lot of YouTube videos that will teach you what to do, how to prepare, and everything like that. So yeah, if you have a regular job, it's pretty easy. literally just input your W-2 that your company sends you into TurboTax, and it'll basically do everything for you. If you have your own business, it gets a little bit more challenging, but still, it's not anything complicated. It's nothing to really stress about. Again, there's lots of YouTube videos to watch. And then also, if you have your own business, make sure you separate your business and your personal expenses. Best way to do that is just get your own business bank account and have the money come into that business bank account that you make. And then from that bank account, make all your purchases for your business. That way, everything's separated. Step further would be to connect something like QuickBooks to that business bank account, and that will do all your basically like your, what do they call it, John?
County.
Basically, yeah, like all your accounting for you. So how much you spent on rent, how much you spent on gear, how much you spent on equipment, how much you spent on gas, all for your business. And it'll make all those calculations for you, and then you'll import all that QuickBooks information into either TurboTax or to your CPA, your accountant, whoever's going to be doing your taxes. And then they'll be able to use that quickly to figure out all your deductions, everything like that, and then figure out how much you owe in taxes. So again, might sound like a lot, but lots of YouTube videos on how to do it. Don't be stressed out about that. Yeah, there's lots of information out there to help you. So yeah, that's taxes. Now, when you move out of your parents' house, right, you need a house. You need somewhere to live. You need to rent something. If you can buy something, go for that, you know? But me and John kind of had two different directions that we went with this. When I got married with Esther, we had this plan to rent, but at the time, the rent where we were going to be renting from wasn't finished being built yet. So what we had to do was we had to live with Esther's parents for, I believe, 3 months or so, 3 or 4 months, and which I'm really grateful for her parents. That was very nice of them for allowing us to do that. And I know there's a lot of people that say, oh, I don't like living, like when I get married, I'm not trying to live with my parents and all this stuff. Every person's situation is different. So you can't just, what's the word? You can't just judge people based because they live with their parents. And also you can't just completely negate that option. A lot of times that will set you up for success later in life. That will help you with saving a down payment for a house. That will help you with saving some money, saving that money you got from the wedding. So it's a good option if your parents allow that to happen. Some parents don't want that, don't want their kids to live with them after they get married. That's a conversation you have to with your own parents. But if your parents are offering, and if your parents are offering to let you live with them, you can't just completely negate that. You always have to consider that because maybe that's the best option for you at that moment. So Esther and I lived with her parents for, I believe, 3 months, and I had just moved into the state, into Florida. I didn't have a full-time job yet, so that was perfect for our situation. That helped us get on our feet, helped us help me with my job, helped me get a job and everything like that, get situated with my business, start making some income so that when we did move out fully, we were ready to go. We were set up. We had furniture and everything like that to move into our rent. John, on your hand, what did you do?
So what we did was we lived with our parents in Washington for a year, and then we were looking for a house, and we were able to buy a house here in Florida. So I just wanted to talk about because when we were looking to buy a house, dude, it felt like the most stressful thing in the world. Like literally, like we knew nothing about, so this was our first house, obviously. So we knew nothing about buying houses, like how to even get the process started, nothing, you know. Insurance, property taxes, all that stuff. It was all new to us. We didn't know how to do anything. So I'm just gonna go real quick and give you guys a quick guide on how to buy your first home, second home, whatever. But this is pretty much just a basic guide on how to buy a home for anyone listening. Step one, what you got to do is have good credit. Step one, you got to have good credit. What I recommend for this is when you're 18, I know a lot of people are against this, a lot of parents are against this, but I recommend every 18-year-old to go out and get a credit card because you will need it.
Yeah,
You will need the credit.
definitely. And if you don't trust yourself with a credit card, well,
It's time to start trusting
yeah,
yourself
start
and
trusting
build that
yourself.
discipline because you're gonna need it in life. I know a lot of people are trying to go by Dave Ramsey's way, where
No credit.
no credit, none of this stuff. But it's so hard to buy a home without any credit. Like
Yeah.
you're gonna need so much cash down, and especially in the kind of economy we live in right now, homes are getting out of this world expensive.
Yeah.
It's getting a lot harder for our generation to buy a home. So with good credit, it's gonna make it just that much easier.
Yeah.
So what I recommend, if you're 18-year-old, if you're 20-year-old, if you're 24-year-old, you don't have a credit card, go out and get one because you're gonna need it. Who knows? Maybe in a year or 2 years, you're gonna be married and you're gonna be thankful that you got one, or your spouse is gonna be thankful that you got one.
Yeah.
So if you don't trust yourself yet, if you don't know how to use a credit card, a lot of YouTube videos about it, or ask your parents. It's pretty simple. Just what I recommend, just put like gas on it. Just stick to one thing. If you're just getting used to using a credit card, just stick to one thing. Buy gas. Every time you go fill up your car, just put it on the credit card, pay it off the next day or pay it off in a couple days.
Yeah.
Pay it off right away though. That's the key. Just use it. What I always tell people is use it like a debit card. So if you look in your bank account and you have no money, don't use the credit card.
Yeah.
Just use it, because if you were to use a debit card in that situation, you had no money, it wouldn't let you go through. So same thing with use it like a debit card. So look in your bank account. Okay, I have $500 in my bank account. I'm trying to buy this thing for $100. Okay, I could afford it. You pay with the credit card. In a couple of days, pay off your credit card. Bam, money takes out of your checking account, and you're at 400 now. So just have that good discipline in the back of your mind that I'm not gonna just spend just because I have this credit card. I'm just gonna go out and buy a whole bunch of things. No, only buy things you could afford.
Yeah, for sure.
And that will build your credit. Keep it under. So when you open up a credit card, it's gonna give you a credit line. Best way to build your credit as fast as possible is first always paying it off. Never have a balance go over. Never miss a payment. Second thing is to keep it under 10%. A lot of people say under 30, but I found it under 10% to be the best. So say your credit line is $2,000, keep the balance under $200. That's going to be under 10%,
10%, yeah.
and that's going to build your credit credit score as fast as possible.
That's called your utilization ratio. So basically, how much of your credit limit you are utilizing.
Yeah.
So keep it under 10%.
So once you have a good credit, so say you've had credit for like 2 years already. 2 years is a good amount.
Another thing is, right before you go into it, John, that first credit card you get, make sure it's one that has no annual fee. Open it up at 18 and just keep it open till, I don't know, until you die or something.
Literally, never close that
Never
credit card,
close it.
because another huge important factor about credit cards or your credit score is age of credit.
Yeah.
And so that one credit card that you open up at 18 or 20 years old or whatnot, your first credit card, it's gonna hugely impact your age of credit because it's gonna be the oldest card.
Yeah.
Right, Kat?
The cat has joined
Right.
us.
That's right. Whoa, buddy.
All right.
All right. So yeah, age of credit. So once you have good credit, great credit is like in the 700s. Once your credit is in the 700s, you could easily go and go start looking at houses if you could afford it. So that's the next thing, affordability. So you want to have a good enough down payment for your house. You have to have a certain amount of money saved up already. These days, there's certain loans like a FHA loan, first time home buyers loan, where you only need 3.5% down payment of a house. So say you're looking at a $300,000 house.
Yeah.
That's gonna be some quick math.
300K house, 3%. What is that, 3K?
10 and a half.
Pause.
Wait, is that right? Yeah.
Actually, yeah.
It should be 10 and a half.
That makes sense, actually.
My math was right. So 10,500. So yeah, if you're in an area where you can buy a good home for 300,000, say it's a townhouse or some kind of condo or whatever, or if you're like in the East Coast or South and you could actually buy a house for 300K, That's what you're looking at, the range. So 10 and a half plus you want to have probably another 10 and a half, to be honest, for just closing costs that you're gonna have to take care of.
Mm.
And that's something that a lot of people don't think about. But closing costs are pretty expensive. So you just want to have a reserve of like, I want to say from like $6,000 to maybe $8,000 after that down payment of just reserved for closing costs.
Yeah.
And so say you got that $15,000 to $18,000 saved up. Okay, you can start looking at a few houses to get. So you have your down payment, you have your closing cost, and now you have to check how much, monthly, what monthly payment you could actually afford. And you could do this a few different ways. You could look at house affordability calculator on Google. I recommend that a lot. Or you could also look on like Redfin or Zillow. They have, when you click on any property, if you go down to the bottom, you could kind of see how much that house is going to cost you per month. And you look at it and you look at it and say, okay, for this amount of money, or if I get like say a $300,000 house at a certain interest rate, it's going to cost me $2,200 a month.
Mm.
And you're thinking about it, and that's with like taxes and insurance included. And you're thinking about it, you're like, can I afford that $2,200 a month? Because if you can't afford that $2,200 a month, if you have other like debts or something, if you have a car payment that's $500 a month, or you have credit card debt that's like another $1,000 a month or something, or student loan debt, it could, all those factors weigh in. So you have to see, do I have every month, do I have $2,200 a month that I could spend on a house mortgage, instead of maybe I'm putting it into my savings, or maybe I'm putting it somewhere else, or maybe I'm just using it on clothes or something. Do I have that 2,200? And maybe it's more. Maybe it's where you live, it's gonna be like 2,500. If you're like in Washington State, California, maybe it's gonna be like 3,000 or 3,500.
Yeah.
It gets pretty up there. So you have to make sure that you're able to afford that monthly payment.
Yeah, because you have to factor in, I mean, you have other expenses. You have insurance, you have car payments, you have gas, food, you got to eat, and all these other things. And I mean, that's a lot of money that you have to allocate each month to your mortgage. So that's going to leave you with less for everything else that you want to do and everything else you have to pay for. So make sure that you get your house, that calculator, affordability calculator, down to figure out how much you can actually afford on your house.
For sure. And then after that, after you find out, all right, I have good credit, my credit's like at 700 something, I have a good amount for a down payment and closing costs, and I could afford this much per month. Now you go to a lender, and I would honestly ask around, like either your parents or people maybe friends that have went out there and bought houses already. Ask them who they went with, because word of mouth is word of mouth is probably the best type of reviews you could do, because if they enjoyed it, or if their process went smoothly, it's probably going to end up that your process goes smoothly too. So I honestly go look around, or look around YouTube as well, or not YouTube, Google around your area, see some good loan officers.
Yeah.
Go to them, get pre-qualified. Different from pre-approval. Pre-qualified is just you give them all the information. So say you tell them how much you make, how much debt you have, and I think that's pretty much it, actually. How much you make and how much debt you have. I might be missing something, but pretty much you give them all the information, and they're like, all right, based on the information you gave us, this is how much we would pre-qualify you for. It's going to be a certain amount. It's going to be like $450,000.
Do you tell them your credit score too?
Yeah, I believe you give them your credit score too. Or they do a soft pull. It's not a hard inquiry. It's a soft pull of your credit. Kind of when you just check your credit. So you give them all that information, and they tell you how much, based on all the information you gave them, they're gonna pre-qualify you for this certain amount, which is like, I don't know, it could be like 350,000, it could be 400,000, way more if you're saying you make a lot more. So say you get pre-qualified for $400,000. That means that based on what you said, this loan company will give you a loan for $400,000. That doesn't mean the house has to be, when you're purchasing the house, it doesn't have to be $400,000. It could be, obviously, it could be a lot less, or it could be more, depending on how much of a down payment you put. So say you had that $10,500 for the down payment. Now the house that you buy, it could be $410,500.
Mm.
It's just that $400,000 is just the loan amount, not including the down payment.
So just the amount that you don't have.
Yeah, just the amount that you don't have. Obviously, I would recommend going as low as possible for your first home. Try not to just break the bank try not to max out that. So say they give you 400,000, or say they'll give you 400,000. Try not to max out that 400,000, because I mean your monthly payment is just gonna be a lot. Try to go as low as possible. So you got pre-qualified from the lender, and now you have an idea of how expensive of a house you could go out and look for now. So now you know that, okay, I could go out and look for a house that's up to like $410,000. So now you have an idea, and you could kind of look and into your Redfin or Zillow apps. You could put in that in like your houses. When you click on a house, you could put in 410,000, and it'll show you how much per month you'll pay, and then you can see, all right, yeah, that's in my monthly affordability number that I could afford. Or you're gonna be like, no, 400,000, that's gonna be actually way out of the affordability range that we could do per month. So you got to be like, all right, well then I can't afford even though they approved me for, or pre-qualified me for 400,000, I could only afford, say, 310,000 based on my affordability calculator and how much I could afford per month. So now you got to look at the 310,000, because you already know that 400 number is way too high, out of your range, and just stick to that then, because you don't want to be out of your budget. So once you do that, once you get pre-qualified, the next thing you got to go do and actually get pre-approved by the lender. This is, they actually do a credit check. They take all your paperwork, and what you will need is your W-2 form. So if you have a regular job, your W-2 forms from the past 2 years. If you're 1099, I believe it's
6 months.
Yeah, I believe it's like 6 months. The next thing you'll need is pay stubs from the past 30 to 60 days that you got paid from those jobs, and then proof of other source of income. So one thing that happened to me is I sold my car, and I thought, well, I'll just use that money that I sold the car with for additional down payment or something like that. And they didn't let me, because certain lenders, you have to talk to your lender about this. If you're thinking about selling a car for a down payment, or selling a car to have some extra money for a down payment or closing costs, you got to talk to your lender about it, because once you go into the pre-approval process, they actually monitor your bank account, because they can't just have random money flowing in, because they see that as
fraudulent activity, or what?
Not fraudulent, but they see that as like, they don't know where this money is coming from, so they think you're a little bit suspicious. So say you're like thinking of just selling a car. Yeah, I'm gonna sell my car for 15 grand, and I'm gonna have an additional 15 grand for a down payment. You got to be really careful and ask your loan officer how you're gonna do that, because some of them actually don't let that. And whereas some other loan officer that I know of, they actually, all you would need is like a bill of sale, and that's pretty much it. But some loans, like for instance, my loan officer didn't let us do that. Didn't let us just do a bill of sale. So there's ways around it. You could have a family member. You could give that money to a family member, and they could give it to you as a gift, pretty much. So you sell the car, you give them the cash, and then they send it to your bank account as a gift, and then you have to fill out a gift, pretty much gift letter for the loan company. You could do it that way. So I mean, there's ways around it, but just keep that as a heads up. It's not as easy as it seems. You can't just toss $50K into your bank account and just expect to use that as a down payment.
Everything has to be processed. And
yeah, because I believe they monitor, like, I don't know if it's like the last 3 months, but there's a certain number of months that they monitor your bank account.
So maybe it's not when you're buying a house, don't really keep money in cash form or in your mattress or something like that. Like, make sure it's in your bank account.
You just have to let them know. There has to be a way that you tell them where you got this money, and it can't just be like, oh, I pulled it out of my mattress. Like, that's not gonna slide.
Yeah.
So another thing is, like, if you're buying a house right after you get married, that's also a big thing, because during your wedding you get a lot of money, but if you're buying a house right after you get married, you can't just toss all that money in your bank account and then expect to use it. Like we bought it a year after, so once we tossed it in, it was already fine, because we had to wait a year. But for someone that's buying it right after they get married, it might be might run into some problems because you're having all this money get thrown into your bank account, and they're
Yeah.
like, "Where did this come from?" And you could say from your wedding, but now you have to give them a um
Written
how do I say
statement
it?
or something.
Like a statement from every single person that donated this money to you.
Oh wow.
Yeah, so it's gonna get pretty hard. So if you can't buy that, buy the house before you get married. But if you can,
Yeah.
that would be
Before you move on, John, I wanted to touch on so that was basically if you have a W-2, right? You're gonna get checked on the last 2 years. You need pay stubs right from the last 2 years, or just taxes from the last 2 years.
pay stubs from last 30 to 60 days, W-2 forms from the past 2 years.
Yeah, and then if you're self-employed or you have your own business, which is basically you'll be having a 1099 in that case. Um, I have to check it again, but I believe they actually check the last 2 years of taxes for your 1099, which means they're gonna be checking you not based on the amount of money you made. So say your business brought in $100,000, but you wrote off a bunch of stuff and your profit was only 20 grand. They're gonna check that as in you made 20 grand, not that you made 100 grand. So when you're buying a house, because I know a couple people where they told me that they had their own business, they were making really good money, but they were writing everything off. They were like making it so that they had to pay as little in taxes as possible. And then they went to go buy a house and they didn't get approved for basically anything because the amount the bank sees is the amount, or the loan officer sees the amount they see is your profit, the actual amount you made, which is that 20 grand, not that 100 grand, because you wrote everything off. Everything else was an expense. So they see that as that's how much it costs to run your business. So those 2 years if you have your own business, you're self-employed, right? You have a 1099. 2 years before you're planning on buying a house, make sure that you don't write everything you can off. You want to make sure that obviously you can write off some stuff, but you want your taxes to show that you make a good amount. So if you make 100 grand, all right, maybe like write off 20 grand so it shows that you made 80 grand, but don't write off everything so that it looks like you only made 20 grand. Does that make sense?
Yeah, and then so I guess the next thing that you would also need is, like David said, your federal income tax returns from the past 2 years. A lot of the loan officers ask for that too, and then recent bank statements. What they usually do is just sign into your bank account. As sus as that sounds, they literally sign into your bank account. And they could just see everything from the past couple months. If they don't do that, they'll obviously ask for your bank statements from the past couple of months. And then what else they ask for is details on long-term debts like car or student loans. And that will affect how much you get approved for. So if you have a car that's 80 grand and you're paying $1,000 a month for it, it's gonna negatively impact how much you get approved for. Or if you have student loans and you're paying a certain amount for that, it's gonna negatively affect it as well. Other thing you need, obviously, ID and social security number. So after you have all that put together, you'll get pre-approved, and the lender will tell you, all right, now that you gave us all the information, we have a better understanding of how much you could actually afford, and this is how much we'd get pre-approved for. So say you got pre-qualified for $400,000, but once they look at all your debt, once they look at all your income, they're like, actually, you know what? We could only pre-qualify or pre-approve you for $380 now because you had some debt that you didn't tell us about or something like that. So now you know, okay, I'm pre-approved for $380,000. Once you know all this and you have your pre-approval letter, now it's time to start looking for a good real estate agent. And I cannot stress how important it is to find a really, really good real estate agent that you trust and that knows what they're doing and that is really good and has a lot of reviews and people saying that, yeah, they know what they're doing and they're really good. Because a lot of times what people do is they have a friend that's in real estate. Over the past couple of years, so many people have gotten into real estate, and a lot of them are like people, family members or friends, and you want to kind of help them out, like, hey, let me help you get your first sale or second sale or something. But guys, this is one of the most, if not, this is the biggest purchase you'll make so far in your life. Like, it's a huge purchase.
Yeah.
It's one of the most important purchases you'll make in your life. You don't want this purchase in the hands of a rookie real estate agent. As bad as that sounds, you have to put yourself and your family first here. Go out and find a really good real estate agent. Ask for references. Ask people around you who they used.
What their experience was with them.
Yeah, what their experience was with them, because you have to look for an experienced real estate agent. Experience will always outperform
Yeah.
anything they say on social media or anything they say that they could do, or how well you think they're doing. Experience will outperform all of that. So go out and find a really good real estate agent. So the first real estate agent we found, they were not very good at all. I felt like I knew more than them. And, there's nothing worse than going on a call with your real estate agent and them saying, oh, yeah, everything's fine with the house. Everything's, it looks good. It just needs whatever, a new door or something. When in reality, the whole house needs to be redone. So yeah, nothing is as scary as that. And the whole house needs to be redone, and your realtor is telling you that no, just a little bit needs to be done. It's not that bad at all, So put your biggest purchase in the hands of a really good realtor. And then so after that, we got a really great realtor that helped us through the entire process, and we were out of state buyers, so it was even harder. But she took us through the entire process very smoothly. We highly recommend her. She was awesome.
And tell them about how you had one of our friends actually do like a check and interview for realtors in this area.
So we had one of our friends actually pretty much
He's a realtor in
he's
Washington.
a realtor in Washington, but obviously he's not licensed in Florida. So what he did is he asked a bunch of people for who they recommend for realtors in Florida, and then what he actually did on our behalf, he would call those realtors and like reference check them, or like interview them and see which one is the best one. And then after he got a report of all of them, he would come to us and say, hey, all right, these two realtors are the best ones. This one has benefits in this. This one has benefits in this. Like, for instance, this one is really good with investment properties. They do a lot of investment property purchases. This one's really good at negotiating. So if you want to get the best deal, this one's really good with negotiating. And then we chose based on that. But yeah, so highly recommend, if you do have someone that you trust in a state, but they're not licensed in another state, and you're looking to buy in another state, have them reach out to those real estate agents, because they already know all the lingo. They could ask them and figure out which one's the best for you.
And it's not like they'll be doing that for free too, because they will end up getting like a referral bonus as well.
Yeah, so our friend actually got the referral bonus for himself by doing that. So
their time is compensated.
Yeah, because he went out and found he in a sense was giving our business to a realtor here in Florida. So in that case, the realtor in Florida gave him a percentage of the deal as well. So it works out for both realtors. You could help out your friend that's in this state, and yeah. So I cannot stress how important it is to find a really, really good real estate agent, because the whole buying process will be day and night for you. You could sleep well at night knowing that your purchase is in good hands, and they're coming with a lot of experience and a lot of things that they saw in their own life, they saw in their own career, and they could tell you about those experiences so that you don't repeat them as well. And yeah, so after that, you pretty much put in an offer. The realtor will guide you through the whole process. The loan officer will guide you through the whole process. And after that, you just start, once you're in the process of closing on the house, you'll look out for insurance for the home. And after that, you'll get set up with the payment structure and all that. And you'll get a day when you have to pay your bills, and you'll sign up for electricity. And yeah, everything will be good to go and you guys can move into your new home.
Good stuff. Good stuff. What was like the biggest struggle that you had when you were moving into this new house, or I guess the struggle when you were buying the house?
I want to say communication with our lender was definitely one of the biggest things that caught us off guard, because so just how I stress the importance of finding a really good real estate agent, I would stress the importance of finding a really good loan officer too,
Mm.
because it's going to be night and day for you as well. There was a lot of times, like, for instance, I wish our loan officer sat us down and told us the difference between um, buying out the PMI, which is uh, property mortgage insurance, I think. It's what happens. You have to pay PMI when you're putting under 20% down payment. So that's what we did. So we have PMI. But there was an option for us to buy out that PMI for a certain amount of money, and we would have saved some money. So it would have been nice for the loan officer to sit us down and say, hey, this is the benefits of buying out the PMI, or this is the cons of buying out PMI, or this is the benefits of just leaving it. And then another thing was buying down our interest rate. You could also buy down your interest rate, and it would have been nice for the loan officer to sit us down, hey, benefits of buying down your interest rate or cons of buying down your interest rate. It's just kind of sitting us down, because what I want to say, what a lot of loan officers don't understand is that they're surrounded with loans all day, and that's all they eat, breathe, and talk about,
Yeah.
and they assume that the person they're working with knows all that stuff too. But we're coming out with, this is our first home. We know nothing about all that stuff. And it would be nice for the professionals to sit down with us and talk about every single option we can do with this loan, and see and try to work out the best scenario for us in every single circumstance. So that would have been really nice. And when you're talking to your loan officer, something I wish I would have done is just ask more questions. But you're going in there so naively. It's everything's new to you. So just kind of go in there and ask as many questions as possible. And if you don't understand something, ask for them to explain it, and so that you get the best understanding of it.
Yeah. That's good. And then what about like, so now you're moving out of your parents' house. I mean, at this point, you should probably have a job. And then if not, you're transitioning to a new job or something like that. What's been your transition from not only moving to a different state, but moving to a different job, and the whole process of like applications, interviews, everything like that?
Actually, I guess one thing I forgot to mention is, if you're out of state buyer, so if you're moving from one state to another state and you're getting a loan in that state, you're actually going to need to already have a job lined up in that new state
Mm.
with a job offer. So what you're going to have to be doing is, during that whole process, you're going to have to start interviewing for jobs in that new state and let them know, hey, you're moving here. You'll be here in whatever date. And you're going to have a job offer to be able to close on that loan. So that's one of the most challenging things too, because you have to find a job. Sometimes it takes a few months to find a job. So if it does take a few months to find that job, that loan process just gets extended more and more. What was the question?
What's that transition like, going to a new job, right? So like interviews, applications, everything like that.
Yeah, it was pretty hard, because when you move to a new state, um, I mean, you're taking everything with you, and you have to still unpack. But then in the back of your mind, it's like, well, next Monday I have to go to work already. You're still unpacking everything. You still want to unpack. You still have to unwrap everything. You're like, shoot, like tomorrow I have to go to work already.
Mm.
Like in a whole new job and a whole new atmosphere, and you don't know. Mostly the biggest struggles is just the unknown. You don't know what it's gonna be like. You don't know what's gonna happen. So,
Yeah.
but you just gotta navigate through that.
Yeah. And then what about, so you recently started a new job. What has been basically, how did you even find these jobs? What is it like looking for a new job? And then how did you make your resume and everything like that?
Dang, we're going that deep. Yeah. So recently I got a new job as a loan officer, and one of the biggest reasons I got this new job was because of um the situation I went through with our loan. When we were getting our loan, it was just super complicated, and so I got this new job as a loan officer because I want to I want to treat people or show people the loans in a way as I wanted to get them when I was looking for a loan, or I want to explain the process to everyone or explain the pros and cons of everything as how I wished people explained it to me when I was going through that loan.
Yeah.
So that's the main reason I got that new job. But yeah, just have a solid resume. Just look up YouTube how to build a good resume. Basically, all you need is just your contact info, your name, phone number, email. Experience is the biggest thing. Just have all your experiences on them, whatever
Mm.
jobs you worked before. And that's pretty much it. That's all that's on my resume. Honestly, people put skills on their resume. I don't include that. I say that in the interviews, and then people put references on their resume. I only do that, so I don't have that on my personal resume. I only have that when they ask for it.
Mm.
But yeah, experience is the most important thing to have on your resume.
And then what about when you do get offers for a job? You had a situation where a job offered or a business offered you a role, right? And it was a pretty high paying job, but you chose to go with the loan officer. Go through that situation.
Yeah. So what happened? So pretty much, I applied for as many jobs as I possibly could. I think my Indeed account, I applied for 60 jobs. And I recommend this to everyone because if you get tied up on one job and you only apply for one job, you're going to be really devastated and waste a lot of time when that job does not hire you,
Right.
or just completely does not even look at your resume. So apply to as many jobs as possible. And what ended up happening was I got a lot of interviews and a lot of people actually accepted me for the position. But you have to look at it and say, all right, which one of these is going to be the best for my scenario? And so that job that David was talking about, they offered me a very high salary and commission, but the loan officer thing, I felt more. So in loan officing, you could actually make the same amount of money or more, but it just takes a little bit more than what this first company was offering me. It takes a lot longer for loan officing, or a little bit longer in loan officing to get to that amount. But I see loan officing as more of a career,
Mm.
and that's something I'm looking for in this stage of my life right now. So um, I see it more of as a career and something that I actually enjoy doing because throughout the whole entire loan process, like I was so like
Stressed.
stressed, but I also really enjoyed everything that I was talking about with the loan officers, and it was also captivating to me, and I really enjoyed it. So that's something. So what you should look for is something you also enjoy and actually have an interest in, and um and have a why. So why I just gave you the why of why I'm going to into loan officing was because the experience that I experienced myself and the situation that I went through,
Mm.
and to provide people that are going to go through the same loan officing or loan process. I want to give them the same quality of service that I wish I would have gotten. So that's my why. So when you're looking for a career, you have to have a why in that career too, something that always motivates you or something that you're always focused on achieving in that career. So that's why I chose that job over the the other job that David was talking about, because in the other job, sure, I would have been making more money right now, like starting off, but there was no why. It would have been just strictly solely on the money. That's
Yeah.
it. And I didn't want that to be my decision maker, was not the money.
Yeah, that's good. And then if you're going another route where you basically want to start your own business or you want to be self-employed, something like that, some pieces of advice I would give would be have just a regular job, something that is easy, coffee shop or whatever regular career you have, and then do your what you want to end up doing as a career, like your hobby or your business on the side. So have like a steady flow income and then do your business on the side. And then get to a point where once that business starts making more and more money, you can go part-time with your regular job, right? So that you still have like a steady flow income and then you have your business income as well. But it's now part-time, so you're devoting more time to your business. And the reason I recommend this instead of just going full force into your business is business has a lot of um, risk and it's not guaranteed income. Um, it all depends on, well, like some months you might have a lot of clients, some months you might have no clients or no sales or no leads, something like that. And it's like it fluctuates month by month. So you might have a really great month one month and you'd be like, oh, it's going to be every month like this. But then the next month, it just goes straight down. You barely make a sale, and you want to prepare yourself for that. So the best thing I say is start it as just a side gig, right? And then move into part-time with your regular job, and then part-time with your business. That way you're giving it more time. And then when it gets to a point where you see steady income, you see a steady amount of money each month that your business like makes, like it's like the minimum it's ever made in this year is this certain amount, and that makes me more money than my regular job, then it's time to transition into going full-time into your business. And when you do make the full-time into your business, you have to realize that now you're your own boss. So there's no one going to be telling you what to do. There's no one going to be setting your schedule for you. There's no one going to be giving you out tasks. That's something that you have to do yourself. So get the Google Calendar app, start writing down tasks that you need to complete, start planning out your day. So from 8 a.m. to 10 a.m., you're reaching out to clients, you're emailing people, stuff like that. From 11 to 2, you are calling people, or you're actually doing the work, whatever your business is. Like, start allocating periods of your day and setting specific like times that you're going to be doing these things, so that you start building out a schedule, you start building out a routine, that it feels more like a job than a hobby, because now that's literally your job now. So my number one piece of advice is, as soon as you go full-time in your business, bust out your calendar and start writing stuff down, start writing out tasks, start getting that part of your life organized.
Yeah, and another benefit of that, going back to the whole house thing, is if you have a regular job, a W-2 job like David was talking about, you could get the loan, because you'll have a lot of people, what they run into is they're ready, they have all the money, for a house, and the down payment and good credit and everything, but they don't have 2 years of tax returns, or they don't have 2 years of W-2s, and they're like, dang, not like I gotta wait a whole nother year. Like, I already have everything set, good credit, I have a lot of money saved in my account, but I just don't have that 2 years of W-2. Now I have to wait a whole nother year and work still another year, and then I could buy. So it's always good just to have that in your background, and just be working that job, just because you never know when the opportunity to buy a house is going to come up, and you always want to be ready. So having that job in the background is like a security blanket. Like, hey, like, I'll have that W-2, I'll have that tax returns for the last 2 years, and it's going to set you up really nicely.
Yeah. Another thing I would recommend is, if you have your own business or you're self-employed, is open up that business bank account. Usually this is free, so it's not going to really cost you anything. Get your EIN number. That's also free to get on the IRS website, and that will basically allow you to open up your own business bank account. Open it up, have basically your operating account, and that's where this is going to be just a regular checking account for your business, and that's where all of the money is going to be coming in, and what you're going to be paying everything out of. So any expenses your business have, your gas, your rent on your office, your equipment, whatever, that's going to be coming out of your operating, and that's also going to be where everything comes in. So any paycheck you get for your business, any client that gives you money, it goes into your operating. From there, you're going to save a percentage for your tax, because now that you have your own business, you're going to have to be paying self-employment tax, and that's a pretty big chunk. So to not be shocked when tax season comes around, because now your paychecks aren't deducting your taxes right away for you, you're gonna have to do that at the end of the year. So if you have a separate account in your business bank account just set aside for taxes, so this could literally be just a regular savings account that you label as tax, right? So you have your operating, all the money comes in, all the money comes out from, then you have your tax, which could be a savings account, and then this basically, from each paycheck, or not paycheck, from each payment you get from a client, you're going to put aside a percentage, 5%, 10%, into that tax account. And you're not going to touch it. you're not going to touch it till the end of the year, right? So a client paid you $1,000 for some kind of service. You're going to take 10% of that, right? $100, toss that straight into tax. You're not going to touch it. You're not going to do anything else, right? You just toss that into tax. And then at the end of the year, you're gonna have a good chunk of money saved up for your taxes, and you're not gonna be looking for money when it's time when you get hit with like a $10,000 tax payment, tax bill, whatever. You're not gonna be surprised. You're not gonna be shocked because you already prepared for that. You have the money set aside for that. You take that money from your tax account. You pay your tax bill, and if there's anything left over, well, there's your tax bonus that you can use for whatever you want. And also, when you're paying yourself from your business, when you're just getting started out, if you have that business bank account and then you have your personal account for whatever else, for your regular stuff, you can literally just transfer money from your business bank account, right, from your operating account to your personal account, and that's like your paycheck, right there. So literally, it doesn't have to be anything crazy, or you can even write yourself a check. You can literally Zelle yourself from your business bank account to your personal, and that's considered your payment for yourself. So yeah, those are a few tips I have for people that are looking to start their own business. And then another thing about transitioning out of your parents' home or moving out is now you make your own decisions about, for example, like what church you're going to be going to, and that's a big important thing in your life, is figuring out what church you want to go to. Because when you're under your parents' house, usually you're under their rules, so you go to their church. But if for some reason you're not getting what you want out of that church, well, now you have the option to go to another one. And I know when we moved to Florida, there's many churches here as well, and I decided to go with the church that Esther was already going to because I already knew people there. I really liked the community. I liked the youth, and I could just see myself getting involved in the church, in the youth, in missionary trips. Esther's dad is a one of the pastors at that church, so it would just be really easy for me to get connected. And I just saw myself as a family member of this church. So for me, it was really easy to just step right into this church, move away from my old church. What about for you, John? What was your kind of experience?
Yeah, my experience was we are still looking at a few different churches, trying to find the right one. But something I recommend for anyone that's looking, so say you move from another state, or say you're in the same state but you're looking for a new church, there's a few things that you could do to kind of better understand a church and better understand which one is going to be the best one for you. So the first thing you got to do is watch the lives. You have to watch the lives and to see if you like their worship, if you like their preaching styles, if you like just the way the service is run. If you think that's something that, or that's a service that you could actually sit in and
Attend.
or be involved in and actually grow from it and learn something. So watch the lives of all the churches that you're thinking of going to. So it could be like 10 churches, 5 churches, whatever. Watch all their lives from the past couple of Sundays and just look, just observe, see, this is good or this is not good, and keep track of them. And then once you see all the lives and you see maybe you dwindle down your list to like 3 or maybe like 4 that you're like, these are all good. I like these lives. Now take those 4 churches and actually go attend them for Sunday services. So if that's 4, go the next 4 weeks, attend each one of those. And then that's going to be your biggest scope of figuring out if this is the correct church for you. But say you dwindle it down after that, you dwindle it down to 3. Go to at least 2 more services from each church, because you can't base the church off of just one service. Maybe they had a guest speaker, maybe someone was preaching that you didn't like, but every other Sunday they have someone really good. Or maybe you didn't like the worship this one Sunday, but all the other Sundays you do. So you have to go to at least 2 more services from each church, at least 2 more times.
Yeah.
And then after that, you got to start thinking about, all right, is this a place where I could get involved in? Can I get plugged in somewhere? Is there some kind of ministry that I could get plugged into? Do they need any help here? Is this somewhere I could grow?
Yeah.
Is this somewhere I want my family to go? Is this somewhere I want my kids to grow up in? And those are all really important questions to ask. And Yeah.
And
Real quick. Through all that, you'll figure out which church is the best, and then you could finally make a decision with you and your family, and whichever church you have the most peace about, it's probably the one you should go to.
yeah, and a big factor of this is about your family. Um, I know a lot of people from our old church in Washington. The reason the younger families were leaving is because there wasn't much that they saw a future in for their kids. Because um, especially in the Slavic household or Slavic Russian Ukrainian families, our parents speak Ukrainian, our parents speak Russian, whatever it is, and then their kids speak basically a mix of Ukrainian, Russian, and English, but mostly English. Well, when their kids have kids, those kids are most likely going to be speaking English, the majority, and they're barely going to understand Ukrainian and Russian. So if you have a church that is only speaking Ukrainian and Russian, well, you got to think about your kids. Well, your kids probably won't understand anything,
Yeah.
you know? So that's also one of the reasons why a lot of younger couples left from our old church in Washington was because, well, there wasn't much that they were planning in the sense of like English services or um, English speaking preachers or anything like that, you know. So they're like, well, our kids aren't going to understand this, so let's go somewhere where they will understand it. And then another thing is, before you any church that you look into, you got to look at their values, you
Oh,
know.
that's a big one I missed. Yeah.
I think that's number one is, all right, well, what do these people even believe in, you know? If if their theology is completely different than yours, you're not going to grow in that church. You know, you're going to stumble because they're going to be teaching something that's contradictory to what you believe in. So, go on their website, find their website, and they usually have a page which is just like our church values. Read through that and see, well, do you even follow these values yourself? And then from there you can decide.
Yeah, that was a good point I really missed. But yeah, definitely look into their values as well. And also from attending their church services, I mean, you'll see if they're saying some certain things that you don't agree with, you're gonna get that feeling. That feeling's gonna be off for you. So, but yeah, that's definitely a huge thing that you should look into.
Yeah, and then make sure you get connected. You don't want to just be a bench warmer at a church, you know, a seat warmer. You want to actually get plugged in, be in a ministry, figure out what you can help with, look at your talents. Are you really good at singing? Join the worship group. Are you really good at videography? Join their media team, you know, photos, join their media team. Are you really good with kids? Join their Sunday school, you know,
Really good
start
with
helping out.
teens or youth,
Yeah,
join their youth
there's
services.
so much to do in churches. I think there's a statistic that, what was it, like 20% of the church,
I think it's lower than that
lower
actually.
10% of the church are the only people that are actually doing stuff in the church, and the other 90 just sit there and come on Sundays or something like that. That shouldn't be the numbers that we see. You know, everyone has a place in the church. Even the old elders, you know, like they're praying, they're prayer warriors, you know, they're discipling, they're mentors, you know. Everyone has a place in the church and everyone should be doing something.
Yeah.
Another thing about moving out of your parents' house is now you yourself are responsible for your relationship with the Lord. You know, your parents aren't going to be there to make sure you read the Bible. Your parents aren't going to be there making sure you're praying. You have to now do all of that on your own, and that has to be a priority in your life. You know, waking up in the morning, you have to spend time in devotions, or at night, whatever time it is. But you have to make seeking God, having a personal devotion time. You have to make that a priority in your life, because if you don't do that from the start, if you don't make that a priority from the start, you'll just ignore it for the rest of your life. You know, like that'll become just
It's gonna be really
a
hard to get
nuisance.
back into there.
Yeah, it'll become a nuisance for you. And be like, I'll just go to church on Sundays. You know, but if you make that a priority from the jump, as soon as you move out, you're like, all right, now, you know what? I'm gonna make this a priority in my life. You'll see the fruit of that for sure.
Yeah.
Yeah. All right. That's everything I have on my list. Yeah. If there's any more questions that you guys have that you want us to go over, we could definitely make a part 2 from this. I think there's a lot we missed. Um, there's a lot more we could probably go in depth in as well. If there's any questions you guys have, leave them below. If you're watching on YouTube, comment. If you're listening on Spotify, I'm pretty sure you could leave a comment as well on there. If you're watching a reel or through Instagram or something like that, leave a comment as well. We look through all the comments. We look through what people say. So um, leave some feedback, leave some questions. Let us know if you want a part 2 of this, and we'll be happy to do that. All right, guys. Thank you so much for listening. We appreciate you guys, and we'll see you guys next week.
See ya.